Is the answer to high insurance rates just more insurance? Stay tuned, and we'll see if we can answer that question. Hello, everybody, and welcome back to another episode of the Airing of Grievances. My name is Eric Reamer. That's Robert Grieve. And yes, he's here. He's back.
It's great to be here.
Man, welcome back from court.
Thanks for filling in.
Oh, gosh.
I appreciate that. It's been an interesting few weeks.
To say the least. Yeah. And Rob, we got a great one today. But before we do anything, of course, it's our tradition. Happy Saturday.
Happy Saturday to you, my dear friend. So good to see you and be here with you.
Yeah, absolutely. You heard the tease. Is the answer to high insurance rates, which we can all agree on, that's a thing.
Yeah, it's outrageous.
Right? Is the answer to those high insurance rates just more insurance?
Or different insurance?
Or maybe not insurance at all?
At all.
Here's the thing. We were strolling through the interwebs, and over on Repair Driven News, Laura Lowry wrote an article talking about in fact, let me pull it up for you right here. Startups promising insurance savings and deductible coverage.
That gets my attention.
In a heartbeat, right? Mm-hmm. Wait a minute, hold on. I'm all for startups, love new business, right? But promising insurance savings, how do you do that? And then deductible coverage. And that my first thought, and I read through the article, and I'll post a link to it below. My first thought, Rob, was, is this insurance for your insurance?
Ish.
Is it another layer of complexity that...
It is.
It's
another party that you're dealing with and paying.
Yes. And I started to think to myself, out loud, to Rob, that, wait a minute, when does it end? Right? It's just another layer, and when does it end? But I thought about it for 24 hours. And I kind of started warming up to the idea.
It's an interesting thought.
Yeah.
And it could work.
With that being said, let's do a disclaimer. As we do in all of our YouTube videos, neither Robin nor I are insurance agents, though he used to be one. We still like him. Neither of us are lawyers, and neither of us have bought into this product or service yet.
We're looking at it just to see if it would help.
Yeah.
Because, every $100 a year these days is important to all of us.
Absolutely. So let me break it down the way that I think I understand it. You correct me if I'm wrong.
Okay.
But there are...
Both products are a little bit different. They handle the same thing in a different way.
Right. And when we say products, we're talking about two different startups, two different companies that I think have come on the scene since September of this year, 25. And one of them is called Zeroed Out, and the other one is called Deductify.
Right. Neither are insurance products.
That's correct. They make a big thing about that they are not insurance. And I asked Rob, I said, aren't they? They act kind of like an insurance policy for your deductible. But they're not necessarily, in fact, they are not categorically actual insurance products. They're
more like memberships or subscriptions.
Exactly. And those are the terms that they use on their pages, respectively. Now, here's the thing. The way that I understand it is, let's just say I have a $500 deductible on my insurance policy, which is currently being held by Nationwide. Okay, that
doesn't matter, but go ahead.
That's what my situation is. If I were to increase my deductible from $500 to, call it, $1,000, theoretically, the premiums would be lowered
They would.
for the mitigation of risk. Does that make sense?
Yep, because you're assuming more of the risk.
Right. And we could go one step further. If I went from $500 to $2,000,
You see more of a significant change.
right. Now, both of these platforms talk about up to 30% of savings. We can't validate that. We don't know if that's going to be your situation.
And I find it highly unlikely.
Well, you made a phone call to an insurer to have this conversation, and you came back to me and said, the guy says it depends on the vehicle you're driving.
It depends on a lot of things.
Yeah.
It's more than just the deductible and the vehicle. It's probably your driving record. There's, all the different algorithms to go
Sure.
into this particular type of, what your deductible is this, you change it to this, there's going to be savings. The question is how much savings.
Right.
And we don't know that. The only way to know that is to call your
Insurer.
agent
Yeah.
and say, if I change from 500 to 1,000 or 500 to 2,000, what would my yearly savings be?
Right. Let's throw out a number. This is not for you to latch on to, but just for a hypothetical. Let's say your annual savings by doing, participating in one of these plans and taking advantage of it. Let's just throw out a number of you're going to save $500. I don't know if that's a safe number or not. It doesn't matter. Just for the math of this. Out of that $500 savings for increasing your deductible, you will be able to now take that money, some of that money, and pay for these programs, which will pay your deductible or a portion of your deductible. Stay with us. I promise this will get a little clearer. Maybe. And what's left over in the savings, you can save. Or like every other American,
Spend.
Make some clarity out of the mud, if you will.
So, naturally my skepticism goes through the roof whenever I hear about any of these things, and I want to poke holes in it, and there's some holes to be poked.
There are.
But nevertheless, the idea is interesting.
It's very
and
novel.
It all depends on your particular situation.
Yes.
So this is a monthly subscription.
So we're going to talk about Deductify, all right? That's one of the new startups that was mentioned in the Repair Driven News article.
Yep.
Again, link below. So they have 3 different levels that you can do. The Deductify Lite level is $10.99, call it $11 a month. If you pay monthly, if you decide to go annually, you only pay 10 months and you get 2 months free. Okay? But that will cover up to $1,000 of your deductible, right? So if you have $1,000 deductible, they will cover that if you are on this membership program or subscription. Yes, sir.
Couple of things to note.
Yeah.
It's $10.99 per vehicle,
Per vehicle.
not just $10.99,
That's correct.
and it is only for collision.
Now, wait a minute. We live out in the country, you and I,
Yes.
and we have deer and elk on the road.
And hail
And hail.
and other things. It does not cover your deductible for comprehensive losses. I don't know if it covers your deductible for uninsured, underinsured claims, but they specifically say collision claims.
Yes. Yes. So there's a big loophole there. The other company, Zeroed Out, they handle things a little differently.
Yeah, it's a little different.
Whereas Deductify is $11 per car, they say if you pay $15.99 for one car, and then it goes up to $19.99 for three cars.
Yeah.
Right? So, again, we're not going to get too thick into the weeds with these things, but they have different models that are basically approaching the same issue, and that is, if you increase your deductible, you can lower your premiums, saving you money, using some of that money to pay these guys to pay your deductible. And I'll be honest with you, this is just my opinion, not that of Nyland's Collision Center or anybody else. It's got my attention. I'm interested. I don't know yet if it's worth it, but I might push some buttons and fill some boxes for myself to see if this is something that maybe we want to do. Now, there's another loophole to this, Rob, and I think it's a big one. While this sounds interesting and maybe even good, it doesn't change the spots of your insurer. So, yes, you might be able to get your deductible covered, but depending upon which insurance policy you go and what riders you have chosen, you might still get short paid for a collision and the repair.
It happens quite often. And it's happening more and more.
Yeah. So I'm interested in this, Rob. You know, you do your pay per car. It doesn't cover your comprehensive. Here's another one. At least one of these programs does not pay you. It pays the repair center for an insurable claim.
Yes.
That could be a big difference.
That's another big difference.
Because you get to decide whether or not you want to repair the car. Interesting.
Yeah, but here's the thing. If you have a $1,000 deductible now or a $500 deductible and you have that money put aside,
yes,
and you choose to go to maybe $2,000 deductible, finding out that, you're going to save a pretty decent amount of money.
Yeah.
Well, you've already got this money tucked away.
Right.
So they're going to pay the other part of it. And, there may be something here.
Right.
It is really going to be individualized as to what your policy is and what the difference is going to be by moving your deductible.
Yeah.
I've never found that changing the deductible really is that dramatic of a difference. But in today's situation, it may be... I think it... Look, I'd ask.
Yeah.
And I intend on asking.
We saw one report that said up to 40% savings by going to a $2,000 deductible. Both you and I scoffed at that because it just seems unlikely.
Yeah, and it's not going to be 40% of your total insurance premium. It's going to be 40% of the collision part of your policy on each of the vehicles that are there. And the one of them, I believe it said, you can only collect one of these a year.
One per year.
So if you have it on 3 cars, have 2 accidents, you may have only one deductible paid. So there's a lot. It's like 3-card Monte, right?
That's the New York
back and forth with the cards, and
the New York street game that happens to be the hit of the hustlers and magicians.
Yeah.
It's
like anything else. It's tricky. It's individualized, and this may be a good product for people out there. I don't know. I don't know what their history is. I don't know anything about these companies, other than the headline caught my attention.
Yeah.
And I said, well, let's see what it's really all about, and kind of poke some holes in it. And, when I saw that it didn't cover comprehensive, well, people have hail.
Yeah, we
do.
do.
They get hail damage. That it would not, according to what I read, would not cover that because it's on the comprehensive side.
Right.
Which means now changing that deductible, you'd only want to change your collision deductible, not your comprehensive deductible. Or maybe you raise your collision deductible and lower your comprehensive. It's all a game. And you're going to pay in the end,
You are going to pay in the end.
just like me.
And depending on which insurer you're going to have, you might pay multiple times in the end.
Yeah.
So, Rob, I think this is something that I would like our viewers to chime in on.
Yeah.
I want to hear if you've ever heard of anything. I think these are two new products, two new things. I'd never seen anything like it. But as recently as September, they joined the ranks of the working people. I want to know what your thoughts are on it. Can you poke more holes into it, or do you say, "Let's go"?
Or if you call your agent and figure out what the difference would be for you,
Yeah.
we'd love to hear it and see if it makes any sense, because truly it is going to be individualized. I was talking to somebody, he's got a brand new Hyundai and a brand new BMW. Naturally, the rate on the BMW is much higher
Of course.
than the rate on the brand new Hyundai.
Right.
They're both expensive to fix, but regardless, maybe the BMW, it's worth putting it on. And
Sure.
it's so individualized.
Yeah.
And if somebody's got a very expensive car, maybe it makes total sense.
Or if you have a very expensive car, maybe you can cover the $2,000 deductible.
Or you're paying $120 a year
Right.
for a $1,000 benefit.
That seems
If-
to make sense.
If you have an accident, a collision accident that you're getting fixed, I mean, there's always these little loopholes.
Yeah. Yeah.
So that's what we got for today.
I think it's intriguing. I literally think that this is one of those ones. Welcome back, by the way.
Yeah, it's great to be back.
It's one of those ones in a quagmire of gray skies, which sometimes happens in this industry, and it seems to be happening more often these days.
It's boring.
This is at least a tiny ray of potential sunshine.
At least it's an interesting subject, and
Yeah.
I kind of laughed at it the first time you brought it up.
I
But
did too.
Hey,
Let's see.
let's throw it out to you and see what you have to say. So with that, I wish you a very, very happy Saturday.
To you.
Sir, great to be back. We'll see you next Saturday. God bless.